Well, hey everybody, good to have you on this video today. And yeah, I mean, it's been a while since I've been back. Have had a lot of things going on. We had an office move, we had fourth quarter stuff to get done, first quarter stuff to get done. I guess I could keep going on with the excuses, right? So it's been a while, so I'm glad to be back on the video with you guys to go over a couple of things that I want you to be thinking about, especially over the next few days and especially over the next few months as we head fast, by the way, into 2020. Now I know that but when I'm recording this in actually end of the first quarter of 2019, but 2020 will be here before you know it. There's going to be a lot of implications because of that. So let's talk about what some of those things are. And what we're going to talk about is two words: risk avoidance, okay? Risk avoidance. So we're going to cover risk avoidance. And what I want to do when we cover this, by the way, is this is not going to be a video about how to avoid risk. It's not. Okay? It's not. Because we're going to cover some things that I'm going to call BN. And BN is not Barnes & Noble, by the way. BN is bad news. Okay? I got some bad news for you. So if you are an investor, and over the next couple of years, especially as we go into this year right here, 2020, if you want to avoid risk, good luck, because you're not going to be able to do it. I don't really care what you're invested in, you're not going to be able to do it. It's not going to happen. Okay. So what am I talking about? What do I mean by that? So Darin, are you saying every investment's going to have risk? Every single one? Every single one. Okay. You will not, if you are an investor that wants to avoid risk, it's not going to happen. Why is that? Well, let's go over this. Okay. First of all, what is coming up? Let me hit the big one, and I've talked to many of you about this already. What's coming up in 2020? That's right, elections. All right, and almost as I'm recording this, not less than 2 years from now, we may have the same president, we may have a new president. What do you think the markets, what do you think the atmosphere, what do you think it's going to be like between now and November 5th, 2020? What do you think is going to? What do you think it's going to be like? It's going to be an up and down roller coaster ride. Okay, because remember, now all conventional markets are subject to politics, aren't they? Aren't they? How much mudslinging do you think we're going to see in the next 2 years? How much policy, conversations, economic, foreign, you name the policy, but I'm really thinking more economic policy, by the way. How many potential changes, or using a politician's word, improvements do you think we're going to see? Right? That will be talked about, that will be discussed, that will be debated. Okay? But there's a shred of chance in almost all of those that we're going to see some changes, right? So politics is going to play a huge role in this over the next 2 years. And I don't care what investment you're in. I don't care if you've got your money parked in the bank or the credit union CD, and that institution has been around forever. You could have some issues because of the potential changes, right? You could. So there's really nowhere you're going to be able to go that is going to be immune to risk. But there are some places that I think we can logically talk about are going to have more risk than others, don't you? I mean, I hopefully you agree with me on that. So let's talk about those. Let's hit like the obvious ones, okay? So let's hit business startups, okay? I'll just use BSU for my acronym for that, business startups. So if you're involved in venture capital, hedge funds, those kinds of things, you know, probably one of the riskier places you can go are going to be business startups or investment in any kind of business. Doesn't matter, technology, bio, I mean, whatever. The list is long. So business startups is where you're going to have a lot of risk, okay? Especially during the next few years with all of the things that are going to be going on. And here's the really sad thing about this. I mean, this really sucks, by the way. I hate it. Is all of this is affected by things that don't really affect the business, right? So if I want to sell paint, my business can be affected by whatever the geniuses in Washington decide, right? Even though I can sell a hell of a lot of paint, my business can still be affected by a force outside of my control of my business, right? So, business startups. Second one, this is an easy one, I think, commodities, you know. Commodities. And the big commodity here in the heartland is, of course, grain, soybeans, cattle, pork. I mean, those are the biggies, okay? Especially grain is the biggest one. So you got commodities. You want to talk about wild swings? Go ahead and get in the commodities market. I keep getting in the mail a pitch to be involved in like this commodity investment business, even though I've unsubscribed from their list. I've told them not to send me stuff. I actually admire them. They're still like sending me stuff, even though I've said don't. They're still hammering away at me. So of course I get it. I got to look at it. And so and that business I keep hearing about is all about having a small business investing in commodities. Can you imagine not having butterflies every day investing in commodities, right? That'd be a toughie. I think that'd be a toughie, all right? Third one, conventional markets. Okay, or let's just call it Wall Street. Wall Street. By the way, this is where most money is in one way, shape, or form, right here. But it's on our list of places that are going to be affected most and are going to be, I think, areas of risk. Remember, are you going to be able to avoid it? No. But what areas will be what investments will carry more risk, more unknowns, more guessing, really, more bets. I mean, I always like how you read, every financial publication calls them bets. You know, I always thought when you made a bet it was like at a casino or, playing poker with your buddies. That's what I thought bet was, but evidently it's, investing is the same thing. So, conventional markets. Huge. Huge. And then the last one is, and I'll just put this right here. So we'll put conventional here, so conventional markets. And then we'll put unconventional. And beside that, I'm going to put boring. Boring. Okay, boring places would be we'll have the less risk out of all of them. Okay. What are those boring places? So we talked about, before I get rid of this, okay, we talked about business startups, commodities, conventional markets, which is Wall Street. I mean, this is really 1, 2, 3, 4 on the risk radar, okay? And we could, of course, branch off into different categories and subcategories here if we wanted to. I could come up with a whole list of them, but I just wanted to be general with you on this, okay? So, those are it. So if we talk about the least risk is going to be unconventional, we really only have 3 types of unconventional investments. There's really only 3. Okay, here they are. 1, banks and credit unions. I mean, I could put money market funds in here too probably, but I'm just mainly thinking checking, savings accounts, CDs, okay, maybe money market accounts. That's basically what I'm talking about there. Pretty boring, like I said. These conventional, remember these are boring, right? The second is real estate, okay? Real estate, and by real estate, I'm talking about multifamily real estate. I'm not talking about single family. I think single family is in trouble, by the way. I mean, I've been in the real estate business most of my life, and admittedly, I don't focus on single family. I'm not a single family real estate agent having open houses. I'm not on the Home and Garden channel or anything like that. But I can tell you, from being in the real estate business for hundreds of hours a week, that the single family market is in trouble. It's in trouble. And it's going to continue to be in even more trouble. Why is that? Why is the single family home market in trouble? Because of this right here. Gee, Darin, those are 2 nice arrows. What the hell do you mean by that? This is the cost of construction. Okay? Okay? And this is people's interest. Okay? Cost of construction is going to continue to get higher and higher and higher. There's no way of stopping it. It's inflation. Okay? It's going to continue to go up. People's interest, not only because of the cost of construction, but there's a whole host of other reasons, are why homes will sit longer, not sell, and values and pricing will remain stagnant. Okay? Now look, there's going to be places and pockets where this won't be the case. Sure. I'm not saying it's going to be the case everywhere, but in general, you just look, wherever you live, you just check this out and you let me know what you find. Okay? Because in a lot of places it's there now, and if not, it will be there soon. So, that's my little sidebar. But I'm talking multifamily real estate. And then the third, so if we go from, this is where we've got our least amount of risk category. This is 1, this is 2, this is 3. Okay? 3 is, quite frankly, mattress money. Okay? You keep money in a jar at home in a safe. A lot of you, I shared the story about the guy that had $100,000 plus in cash in his safe at home. I know people that have much more than that in safes in their home. I call it mattress money. So if you want to talk about out of the least riskiest places to have your investments and your money parked, these would be it. And if you really wanted to rank the degree of risk out of the less risky, this would be 1, this would be 2, and this would be 3. More risk, middle of the road, less. Okay. I hear you, sure, Darin, your house could catch on fire, you know, somebody could break in, all that. But you rank all these together, this is the least risky. So let's take one out right now. How many of you are going to do this? Some of you will, some of you are. But how many of you are really going to put a full bore effort into this? Not many of you. Okay, so we're just going to take that off the board right now. Okay? How many of you are going to do this real estate thing? Multifamily, apartment communities. I'm going to tell you, a lot of you probably will decide not to, for really stupid reasons, by the way. One of the main reasons people don't is because they hear what's called the landlord stories. Okay? The landlord stories. Oh, I knew a guy, he used to own a duplex, and the tenants tore the shit out of everything. It cost him all this money, he couldn't get him evicted, and this, that, oh, there's no way I'm going to deal with that. Dumb reason, because that happens the minority of the time. Okay, anyway. So most people won't get involved in real estate because of landlord stories. And most of the stories are embellished and, made to, try to, maybe make them into a movie or something. And a lot of them are based on, if they do happen, people not knowing what the hell they're doing. Which is the second reason. Don't know what they're doing. Okay? Darin, I can't buy a 8-unit building. I don't know how to manage it. I don't want to know about property management and the laws and the rental laws and tax codes and what I can charge and what I can't and what the tenants can do and how late on rent they can be, and do I have to go through evictions, and do I have to serve them with a legal note? I mean, I could, we could go on for, a few hours. These are the two main reasons. Okay? Dumb reasons not to do it. Okay, really dumb. Because these two reasons are keeping investors from a hell of a lot of this in the near future, over the coming years. And I'm talking a lot of money is going to be made in apartment communities over the coming years. Okay? The main reason that's going to happen is because, we've talked about this, demand for apartments. Bottom line, we are no longer a ownership society. The American dream is basically fizzled out. Yeah, it's still alive here and there. I mean, it's on life support here and there, but this is basically it. Go ahead. Do whatever research you want. Look at whatever publication you want. Whatever real estate guru you want to talk to. And there is no way anyone is going to tell you that, you know what, I think the demand for apartments is going to decrease. I think more and more people are not going to want to or need to rent. They're going to want to buy their own place and live in their own home or condo, and that's what they're going to do. No, they're not. No, they're not. The numbers, the demographics speak for themselves. Do your research. You'll see that this is the case, especially in the next 3 to 5 years. Okay? Especially the next 3 to 5 years. That is what's going to happen. You got that going, but then you've got even a bigger piece of the pie. The bigger piece is demand from investors. Okay? So let me paint the picture for you on this. A partnership that I have, the Heartland Investment Partners, our partnership, it's a fund. We own a 100-unit property. Okay, one of the properties we own is a 100-unit property. I'll just put it right here, 100 units. It's called Glenbrook. Okay, it's a 100-unit property. Okay? This property, out of 100 units, we will always have at least 93 or more units rented. When the other ones aren't rented, it's mainly because there's turnover. Somebody's moving out, somebody's moving in. And again, demand for apartments, right? That's part of it. But let me ask you a question. If you own an investment company, private equity, venture capital, whatever, and you're looking for a place to put your money, because once these places have billions of dollars to put into something, what do they have to then do? Put it into something. And I know I just sounded as obvious as anybody could, and I promise I'm not trying to talk to you like you're a second grader, but it's hard. Because now you've got investors wanting return on their money, and you've got it sitting there, waiting to get into an investment that's going to give them that return. Okay? You follow me so far? This is what investors are going to want to own. Okay, this is it. Okay? Why are investors going to want to own this? Simply because of this right here. Because of this right here. What is that? What is that? What did I draw there? These are people waiting in line, and this is the door into the apartment complex. There's going to be lines of people lining up to rent, to live at these places. It's going to happen. It's happening now. You're hearing about it a little bit. You're seeing a little bit. You're hearing some other financial, economic experts talk about this. But this is what is going to happen. So again, you're an investor. You're looking for something. You want something that's got some predictability, a good return. You see the trends with demand from tenants. You see these lines of people out the door. What the hell are you going to do? Where are you going to put your money? You're going to call me. That's what you're going to do. And you're going to say, we want to buy, do you want to sell? Okay? That's what's going to happen. And this is where the money will be made. The money's going to be made off of income for sure. Because we're going to have residents leasing apartments paying rent. There's income there. But the big freaking payday is right here. Because not only will there be tenants lining up to rent, there'll be buyers lining up to lease. Let me give you a quick example. It's important to talk about this. Because a lot of this you can't really see out there, but it's going on. So we recently tried to buy a partnership I put together, tried to buy a 188 unit property. And this is here in Cedar Rapids, Iowa. All right, this isn't Austin, Texas. Okay, this is not Milwaukee, Wisconsin, not Minneapolis, it's not Chicago, it's not Orange County, we're not in Florida. We're not in any places that you would think, where would be a great place to own real estate? I had to own one piece of real estate. Where would it be? I'm telling you, Cedar Rapids, Iowa is not the first place on your list. I know that. I know that. Right? So, 188 units. This is $10+ million. All right? $10+ million bucks. My partnership, we make an offer on this thing. We want to buy it. How many other offers do you think there were? Over 10 million bucks for a property in Cedar Rapids, Iowa. 11. 11. Think about that for a second. Let that sink in for just a second. 11. Cedar Rapids, 200 units, 10+ million bucks, 11 offers. So what they did, they whittled it down to the top 5. What do the top 5 do? I'm talking top 5 buyers now. What do the top 5 do? They each submit their best and greatest offer they can submit. Which means the prices were high here, now they're even higher. Why? Demand. From investors. Demand from investors. Okay? Bottom line is we didn't end up getting this. Somebody outbid us. But this is what is happening now. And this again is Cedar Rapids. What I just explained to you is going to expand and expand and expand and expand. Okay. So, where do you think you need to be thinking about parking your money? If you want to get into the boring, if you know that what's coming in 2020 and up through that time and even some years past, we're going to be on some shaky turf. Okay. You got real estate, specifically apartment communities. Okay? But then you got like banks and credit unions. Okay, so where do you think the better return is going to be? If you were just to, let's just guess right now, just think about it. Say it to yourself. Where's going to be the best place for return? Based on everything I've just talked to you about. Yeah, right here. Right here. And by the way, this is ultimately the safer place to go. There's no doubt about that. History has proved that. But it's not infallible. I mean, there are dozens of banks that go out and close every year. Just read about one yesterday in the northeast part of the United States. So, banks aren't immune, but if we really kind of put on the risk scale, it's less risky. But when you talk about rates of return, huge difference in rates of return, huge difference, without that much difference in risk, and that's my point. Not that much difference in risk between these, but a huge difference in rate of return, right? So, what logically should you be thinking about here? Boring is profitable. That's what you should be thinking about. Okay? I mean, this is like the mantra that I'm going to be going with, and you're going to be seeing more and more over the coming years. Boring is profitable. Bring me more boring. I'm happy and fine with it. Okay? Bring me boring. Because that's where the money's going to be made, is in those damn boring apartment communities. All right? In general, you're going to see it. Now, for those of you that are thinking, well, there's no way I can do this. I don't know anything about apartment. I don't want to be a landlord. I don't know what to know. I don't know what to look for. I don't know what to think about. I don't know how to ask all this uncertainty. Again, all the landlord stories that you've been told too, right? Right? So, there's two ways you can go about it. One way is to invest in a REIT or a real estate investment trust. Right? If you don't know what a real estate investment trust is, it's basically a company, and we'll just call it ABC Company for now, that buys apartment communities, okay, and runs and manages them. You as an investor, you invest in the company by buying stock in the company. Okay? That's a stock warrant, by the way. That's what that is. You're buying stock in the company that owns apartment communities. Okay? And that stock will go up or down. It will be profitable or not based on how well the company does owning, running, and managing their apartments. Right? That's what a real estate investment trust is. Remember, this is very important. When you own a REIT, you do not directly own the property. You do not own the property. You own stock in a company that owns the property. You don't own the property. Okay? Big difference. Big difference. So, this is one way to go. Right? The other way to go is to own property yourself directly. Right? And what you do is, especially if you have no interest in time, effort, and energy in running it, managing it, owning it yourself, believe me, not many people do, but this is no reason not to do this. You want to do one of two things. Okay? First thing is you want to get involved in a syndication. Syndications have been around forever. All that really is you and some of your buddies, or maybe some people you own, and in some cases people you might not know. All right, you put together some money, you throw your money together, okay? You put your money together and you buy a property. Okay? And you have somebody else run it and manage it for you. Right? So what some people will do that I work with is they'll put together a partnership or a syndication. They'll hire somebody to do the management. Okay? So this person will do all the management, do all the day-to-day stuff. These people don't have to worry about it, but they get all the benefits like they do all that stuff. Okay? That's syndication. The other thing you can do, which is very similar to a syndication in many, many ways, is you can get involved in a partnership. Okay? Okay? involved in a partnership. So a partnership, like a syndication, is investors get together, pool their money together to own real estate together. Okay? So right now, our biggest partnership has 209 members in it. Okay? 209 members own real estate. They own right now, roughly 700 apartment units and about 50,000 square feet of commercial space. This is 209 partners on this. Okay? Now, did you hear what I said? They own it. They own it. Okay? They don't own the company, they own the properties. So they get all of the active owner benefits of owning the properties without having to do any kind of active management, maintenance, bookkeeping, you name it. Here's what they get. These 209 people get a quarterly report, distributions, and updates. Okay? Sometimes there may not be a distribution depending on what's going on with the property. So let's say we're doing some capital improvements. So like the fund that I oversee, last year was a huge capital improvement year for us. We put millions of dollars into capital improvements. So we didn't have as many distributions as I would definitely like and what my partners would have liked. But we had that money already earmarked to do that, right? So you get quarterly reports, updates, distributions, and access to the manager, the person running everything, which in this case is me, right? And so you get all of the benefits without having to worry about any of the stuff that most landlords do. Okay. So there goes your argument of, well, I just don't feel comfortable. I don't really know. And I hear these bad landlord stories. So what? If you're working with someone that knows what they're doing and has the experience, it doesn't matter. That's why so many people decide to work with us, is because of that, right? So, back to this word, risk. Avoiding it. I got bad news. The winners, the investment winners, are going to be those that don't avoid it. The winners are going to be those that know that this kind of thing is coming anyway, and what are they going to do about it? What are you going to do about it? Because it's coming. It's coming. And look, I'm not saying that, a lot of people right now are talking about, oh, the storm is coming, recession, the shit's going to hit the fan. I mean, you hear all this kind of stuff. And if you haven't yet, you will hear this too. Now, I'm not so much like, oh my God, the sky is falling. No, I'm not there. For all the reasons I just talked about. But where I am at is you're not going to be able to avoid risk no matter what the hell you do. Yeah, put your money in the mattress and see how far you go there, or get it in the safe in your, whatever, in your home or garage. But if you really want to take advantage of the trends that are happening right now, what should you do? Where should you go? And we've talked about that. Okay? So the question is, are you going to just, file that away and decide that, oh, okay, that's good information, good to know, okay. And keep getting your mutual fund statement every month, or your Schwab statement every month, or whatever? Or are you going to park your money in a place where there will be, in my opinion, and the trends are pointing this way, lines of people wanting to rent and wanting to buy. Where are you going to be? And the cool thing is, this is going on while all this financial, stormy chaos is going on, right? How do you spell chaos? I don't even know how you spell chaos. Maybe it's this way. Right? I mean, come on. This is where it is. So this is why I'm making such a big personal push with my net worth and what I've got going on. And I suggest you think about the same thing. So this was not so much a video / podcast about you need to be in apartment investments, because I talk about that all the time. And I have, I don't know, the last couple of years I've just been talking about it. I talk about it all the time. But you will not be able to avoid this. So if you're putting off making a decision, if you're putting things off because of this, you're wasting time. You're wasting precious time. So give this some thought. Think about this. Especially if you're over 47 years old, you damn well better be thinking about this. Because your clock is ticking, brother, and it is ticking fast. Mine is. I will celebrate a birthday this month, and it's more than that. Okay? It's ticking, and you know it. You know it. So now's the time. Now's the time to man up, so to speak, and start making those decisions and start taking action to take advantage of two things. One are the trends that are going on right now in front of us that will be gaining momentum over the next few years, and to take advantage of all of the things that will happen risk-wise because of the things that will happen over the next few years. All right? All right, before you go, one thing I want to remind you of, and that is Discovery Day. This is a good segue into what we just talked about. And this is on March 29th. So March 29th, that's on a Friday. I will have a group of investors that will be joining me, and they're going to be getting a behind-the-scenes look at what we have going on here. All of our apartments, what we do on a daily basis, what we own, what they look like, where they're located, they will get an idea of exactly how the process works and what they can look forward to if they decide to get involved with what we've got going on here. It's a great way to come, see what all this is about, see what goes on behind the scenes, check out the properties that I talk about all the time, kick the bricks a little bit, and really start putting things together. Okay? This is happening on March 29th. We do have a few spots open. I don't like a lot of people because it becomes more like a Disney tour, and I don't want that. But March 29th, there's a few spots open. If you have not made arrangements to come here and join me and join other investors, send me an email and we will get you the information you need in order to do that. All right? Take care. See you. Bye.